What's up, folks? We're going to try something new today. We're going to try a market live stream. I'm a bit late, unfortunately, as usual, but I had to get stuff set up here. So let's see if I can share my screen. I was doing a screen share in the background, but if not, we can improvise. So the market, to start off the year 2022, we're 20 days into the year now, almost 3 weeks in, but just to address the elephant in the room, the market has been very down to start off the year, and it's not been fun for many people. So if my screen share is not going to work, let's do this instead. Is that going to be visible? So we can just go over real quick. Let's see here. I'm back on my laptop, so the lighting's a bit off. So to start the day today, the Dow has opened up 202 points. The Nasdaq is up 193, which is awesome because the Nasdaq has really been tanking. The S&P is up 36 points, and the Russell 2000 is up about 15 points to start the day. Let me try to change the lighting here so we can see better. Bear with me here. Okay, let's try this. Got to start somewhere, right? It only gets better from here. That's the good news. Okay, let's try this again. Can you see that? Yeah, so there's all of the major indexes starting off the day here. And so if we look at the Dow, let's just look real quick at a chart here. Pull up a chart. So yeah, the Dow hit a new high at the end of last year. I mean, the highest it's been is almost 37,000. It's dropped almost 2,000 points from there. It hit its low point yesterday. It bottomed out at about almost 35,000, but it's back up today. So today is some good news, at least, because it's starting to come back, but it's really been down a lot for the start of the year. And being that it's up, there's the advertisement for E-Trade if you want to open an account. I'll do a video on that at some point. Let's look at the NASDAQ real quick. NASDAQ is up 180, but the NASDAQ has really been hemorrhaging value since the start of the year. The NASDAQ, we were almost at 16,000, so we've lost over 2,000 points in the NASDAQ. So it's nice to finally see this up again. This is where most of the tech stocks are. And then S&P 500, we ended our 52-week high was 48.18 and 62 cents. So we're down a few hundred points there, almost, well, less than 300. But that's a larger percentage because the S&P is a smaller total numerical value. So the points, the percentages are larger for the decrease. So yeah, there we were at the start of the year, and here we are here. And then the Russell 2000 is all the small caps. So this really, a lot of experts say that small caps are due for a rebound. Small caps have been underperforming for a while. Russell 2000 was at its high point was at almost 2,500, but I believe that was in the middle of last year, or that was in November, and it's really fallen since that point over the last couple of months. Bottomed out at about well, it's at 2,075 today, but for the year, going back to the start of the year, it was 2,271. So it's lost a couple hundred points. So to talk about these things and just to go over everything I just covered, let's get some lighting back here. Yeah, so to go over everything I just covered, to talk about first, so the Russell 2000, so small caps. What are small caps? Like I've mentioned in other videos, you have small cap, mid cap, and large cap. Large cap is all of your big blue chip companies like Apple, Amazon, Facebook, and Google. There's the FANG index, which over the last many years, the FANG index, Facebook, Apple, Amazon, Netflix, and Google were the top stocks that have most of the gains in stocks have come from those five. Hence the phrase FANG stocks, representing those five. And actually, Netflix has fallen quite a bit since it hit its high point. I actually think, again, none of this financial advice, but I actually think Netflix is at a good buying price. A lot of folks probably can't afford to spend $518 on it, which is what it opened at today. So a call option might be an option. And yeah, the market, like I'm saying, since the start of the year, the market has really it hasn't been fun at all. The market has kind of lost its luster. So I really my goal, my New Year's resolution that I stated, make finance exciting again, is really paramount at this moment. So it's definitely what I'm hoping happens. Because investing is no fun when everything's dropping and we're losing money. It's no fun. Let's be honest. So I was hoping my screen share would work here. Kind of improvising. Let's see if I can do this from the phone. Hold up my phone. I know this looks silly, but it's the first time I've done this. So like I said, it only gets better from here. I actually have the market coverage on in the background, but I'm not going to show that. So let's see. Let's see if we can see this. So yeah, this is the Dow, Nasdaq, S&P 500, Russell 2000. And like I said, I'm hoping by covering this live, hopefully, maybe this can add some this can add some juice back to the market, or bring some good luck, maybe. So let's see. Okay, so yeah, that's the S&P. We've seen so far. We've been open now 25 minutes. Dow's up 317 now, so that's good. And I've been discussing in prior videos. I've discussed options trading. Call options have not been any fun for the start of the year. So until there's some stability in the market, or until we reestablish a bullish market, we probably, to be on the safe side, probably need to avoid those. Again, not advice. But what we're seeing in the first now 27 minutes of trading, each of the three major ones are behaving the same. So you see the Dow. This is the Dow, but we've seen the same thing with the S&P and the Nasdaq. It opened up and then it dropped a few minutes in a bit, and then it's been going back up since the start. So we see this with S&P also. So I wonder if there was any news or something that caused that, because the market reacts very quickly to news. So let's just check real quick. Wish I had the screen share working, but you just have to look at my face. Weekly jobless claims jumped to 3-month high. Another 286,000 Americans filed, higher than expected and from previous week. Other headline here, stock market news live updates. Stocks open higher, Nasdaq jumps 1% after plunging into correction territory. See, that's the thing. Once these indexes plunge into correction territory, um, they start to recover. At some point, it's like in technical analysis, you have support and resistance. Um, so the floor of the market seems to happen when it starts to enter correction territory. Let's see. Just seeing if there's any other news stories that may have caused the market to kind of do the V. It opened up and then dropped and then it's shooting back up now. So it's like a super V. It would be nice if it continues. Yeah, so support versus resistance. Support is the low level that a stock reaches over time or an index. And resistance represents the high level that the stock reaches. So, like if you're looking at a candlestick chart, like I did in one of my first videos, um, the resistance would be and it's kind of counterintuitive because you think resistance would be like the bottom, but it's actually at the top. So support is here. It's the lowest point that the stock hit in a given time period. Resistance is up here. So I'm looking at when an index enters into correction territory, that's like the support level. So it may not necessarily drop below that. And when it gets close, it kind of seems to trigger an upswing. And let me confirm correction territory. Sometimes I know most of this stuff, but I just want to make sure that I'm correct as I say it. So let's see. Yeah, decline of 10% or greater in the price of a security asset or financial market is considered a correction. That's what I thought. But dang, has the Nasdaq dropped that much percentage wise? Let's confirm that. I know I look at the total points drop, but I haven't really paid attention to the percentage. Um, yeah, so if we were at some of these stupid apps don't have this information readily available. So if we were here and then we drop to here. Oh, it was close. 8%, so it was like 2% away from correction territory. And really, other than Jerome Powell and the Fed and their testimonies to in Senate hearings and stuff about interest rates going up, which we know is going to happen. I think he said it's going to happen 4 times this year. Other than things like that, I think a lot of us didn't really expect such a sudden market drop to the start of the year, but it's happened, and we are where we are. We just have to deal with it. So how are we doing now? Oh, the Dow's back below 300. Now, the Dow still gets a lot of coverage in the media. That is, it's not nearly as representative of the overall market as it was in the past because the Dow is mostly industrial and large cap companies. So really, the S&P is the most representative of the market. Oh, the Dow is back to 320, up 320. Just going off Yahoo Finance, but I have some other apps here that I'll use. Like I said, as I get more familiar here, I'll be able to get better at this. Let me see. I guess I can end my screen share since it's not working. Yeah, I have the candlestick charts with all the indicators on my screen, but you can't see that. So what I normally do, if any of you want to follow along, I look at certain indicators when I'm looking at an index or a stock to kind of get an idea. You can't really predict what one is going to do at any given moment for certain, but you can try. You can make an educated guess. So to do that, what I usually do, I use certain indicators. Um, I set I use MACD, which is moving average, convergence, divergence, Bollinger Bands, and simple moving average. And at a minimum, I look at, is something above its moving average or is it below? If it's below the moving average, I often look at that as that could be a buy point. And if it's trading above, I sometimes try to wait for that to come back down. So let me try to show the S&P 500 as an example here. So if we look at the S&P 500, so this is the chart with all the indicators here, the candlestick chart. So the bands that you see are called Bollinger Bands, and then the MACD is down here at the bottom. If you see a red bar, that means it's diverging away from its moving average. Green means I believe, that means it's converging towards it. So green is typically, the way I see it, green is good, red is bad. Um, and then we have a purple line, and then we have like an orange line here. And these are RSI is another one that I track, relative strength index. But we have one is the moving average, and then the other is RSI, I believe. But so moving average, this is the S&P 500. So here, back in September, because I'm looking at a 2-year view, the S&P dipped below this point, and then it went back up. But you see what happens over the last 2 years. Uh, there's a very basic phenomenon called reversion to the mean, and that just means that typically things revert back to their average. And you see that with the S&P here. This is March 2020 when the Rona started. It dropped way below its moving average, which really was one of the best times to buy because you see the dip here, and then it came right back within a couple of months, and then it kind of stalled a bit, went up again, reverted back to the average, went up, reverted back to the average, went up, and it stayed slightly above the moving average, and then reverted back, but it didn't cross below it. So this whole time from the start of 2021 all the way to September, but once we got into September, it dropped below, and then it came back, dropped back to it, and then has kind of hovered there, came back a little bit, and then dropped right back to it. So that's what we call reversion to the mean. And this is just looking at the S&P, which I believe when you're buying into an index like the S&P, which again is the 500 largest companies that are on the S&P index. Looking at an index, though, safest thing, in my opinion, to do is to invest in an index or an indexed fund. So you can't really go wrong with that in terms of buying too low or too high. Well, it's with something like this, you never can buy too low. But if you feel like you overpaid, these indexes go up long term. So, like the S&P, I believe averaged at least 20 to 25% over the last 10 years, and I'll confirm that to be certain. There's different averages that are used. There's different averages that are used when calculating returns. There's a CAGR, there's a simple return, and stuff like that. But the way I look at it, I look in basic terms. So if you look at the S&P 500 over the last 10 years, you see a steady, like a J curve. You see like a J curve going up and really accelerating towards the end. Like I showed, this is similar to when I did the 2 videos on Apple. This is um, this is what Apple and many stocks have done. gone consistently up, but accelerated within the last few years. So if we look where we ended up, and we'll take well the end of the year, 47.66, and then go back to the beginning of 2012. So the S&P was at 1300 around that time. So if we went from 40, so we'll just say 4750 minus 1300. So that's a gain of 3,450 points over 10 years, right? Divided by 1300 divided by 10. So yeah, that's an average return of if you just take the total, you take where you ended up and where you started, you subtract end point from start point, and then divide that number by starting point, and then you get a total percentage and divide that by 10, and that's the simplest way to calculate what the index did over 10 years. So that's 26.5%. So do you think that beats inflation? Absolutely. Especially even if you have the high point of 7%, like we saw in December, you're beating inflation by 19%. So I think one of the safest things you can do is to invest in an index like the S&P. Again, not advice. And you want to be really careful with options too, whether you're doing call options or put options. You can make money in any market, but timing is really important because the time horizon and the volatility on those, you can lose money. You can gain a lot of money, but you can lose a lot of money very quickly. So, with that, that's a start or my first attempt at doing a market live stream. It will get better from here. This was just a rough start, and I think we covered a lot of good stuff. The markets are holding steady, and hopefully we stay steady today, and hopefully we start to come back after being down the first couple weeks of the year. So with that, thank you for watching. Please remember, like, comment, and subscribe, and stay tuned for my next video, hopefully coming in the next couple of days. Thanks.